Hi, I'm your host, Sophocles Sophocleus. On this podcast, we discuss interesting stock ideas from around the world. The goal is to have meaningful discussions by getting into the numbers and better understanding the opportunity. Thank you for joining us. This podcast is being made available for educational purposes only. It should not be used for any other purpose. Full disclaimer at the end of the podcast. Our guest today is Evan Tindel, and Evan Tindel is co-founder and chief investment officer of Bireme Capital. He's been working in investments for almost a decade. Before that, he was a winning professional poker player for 3 years. He graduated with a BS in mechanical engineering from MIT, where he was a four-time All-American in tennis. So Evan, welcome. It looks like you're about to conquer another field here.
Yeah, is it we say Bireme, but is it I guess in Greek it's probably is it Bireme? I don't know.
To be honest, I never heard of it before you mentioned it. So today we're going to talk about British American Tobacco, trades in London, ticker symbol BATS. I think it's a fantastic, it's an interesting idea, and that's why I reached out to you to do this. So what's your elevator pitch?
So the elevator pitch is this is a tobacco company with broadly stable revenues and slightly growing profits over the past 5 years. And the market cap and valuation are just, not reflecting that stability and some of the potential growth levers that they have. So market cap is 54 billion and profits are around 8 billion. So it trades below 7x. And then the two kickers are, under the hood, you have this pretty strong growth in their sort of, their reduced risk products, which are like the future of the industry. And the kind of the cherry on top is they have this stake in ITC, an Indian conglomerate, which is 15 billion, which is, so that's roughly 30% of the market cap right there. That's not really reflected in the valuation. So you have probably a low single digit growing business that trades at 7x free cash flow. And we think over the long term, as they move to more and more reduced risk products, we think it should trade like a normal consumer staples company.
So you mentioned ITC. Didn't they do like about 600 million in profit last year? How much do you think they're worth? And when do you think they're going to sell that?
Yeah, so they sold a couple billion of their ITC stake already last year, and they're buying back stock with it. I mean, the ITC business it trades for about 24 times earnings, which is kind of interesting. They're also going through a similar, not completely similar, but sort of analogous transition away from cigarette sales, although they're much further along, and they're doing it by diversifying into other consumer products. Like they're a large seller of like snack food in India, and they have like a paperboard segment. They have a hotel segment, so they're much more diversified. But I think it might take a while for them to sell the stake. So for my valuation, I don't actually assume that. I don't think you need to assume that they sell it and buy back shares or anything crazy like that in the near term. I just kind of assume that the ITC business continues to grow, sort of mid-single digits, kind of in line with the valuation, kind of so that it kind of grows into the valuation, and it has been growing in recent past. And they pay a large dividend, so it all flows through as a dividend to BAT. So I just grow the dividends over time that they're getting from ITC.
Okay, so they're conglomerate. They have a bunch of other things, and that's probably taking into account in the valuation, right?
Yeah,
So,
I think the market there is definitely. I mean, the tobacco business I think is also doing a little bit better than than elsewhere, than companies like BAT. But yeah, I think the market is really looking ahead to the growth in some of their other businesses, which are more than 50% of the revenue.
okay, so I was looking at their annual report, and it seems they British American, they cover pretty much all types of tobacco. Is that right? Are they missing
Yep.
anything?
Not.
Or
I don't think so. Yeah, they have pretty much every tobacco product that you could have or want. The cigarettes are the main thing. They have some small cigar businesses that they don't break out in the annual report, but they do sell cigars. The overall cigarette and cigar business, which they call their combustibles business, is around 23 billion. The chewing tobacco or snus business, whatever you want to call it, is around 1 billion. That's mostly U.S. The e-cigarette or vapor.
Is that in the modern oral then?
It's they call it traditional oral.
Traditional oral. Okay, so we have traditional oral, and
it gets a little bit confusing because you have you have the combustibles business, which you might think that's all of like the old school stuff, but then you remember that there's like the chewing tobacco, which is probably less risky from like a cancer perspective than smoking a cigarette, but it's still, because it still contains tobacco, it actually is a little bit more risky. Like you can get mouth cancers and stuff from chewing tobacco, whereas the modern oral is just purely nicotine in a pouch, so it doesn't have these chemicals that are in tobacco that cause cancer, so it's thought to be a lot safer.
Okay, so hence,
but they separate it out. Yeah, so like total traditional tobacco business is like 24 billion. And then the modern oral is the modern oral vape, heated tobacco are separate.
Yeah, so we have the vape, we have the heating, we have the modern...
vapor is the e-cigarettes, where you're basically heating up a liquid into a vapor. That's 1.8 billion of revenue. And then heated but not burned tobacco is around 1 billion. That was flat last year. And then the modern oral, which is the pure nicotine pouches, no tobacco, just nicotine, that was 550 million. And that grew a lot last year.
So if you were to rank these, I guess in how much harm they do,
there aren't any good long-term studies, because these things all came out kind of in the last 10 to 15 years. I think for the most part there's a little bit of a consensus in terms of the ranking, which is modern oral is the safest, because you're not putting anything into your lungs, you're just getting a direct nicotine infusion into in your lip or whatever. So there actually is some research that that nicotine itself might contribute to cancer risk, but it's definitely a much lower risk than than cigarette. I think probably the next safest is e-cigarettes, is vapor, and then a slightly more, but it's probably pretty similar to heated tobacco. But yeah, so next is heated tobacco, and then would be cigarettes.
Okay,
I think in terms of risk.
For the consumer, because I don't smoke, so for the consumer, between vaping and the heating, is there a difference?
Yeah, there is. So the first difference is that there's different regulations in different places. So you're actually not allowed to sell e-cigarettes in Japan, for example. So for some reason they just get regulated differently in different places. Like it's basically that the e-cigarette's considered a medical device in Japan, but the heated tobacco is not. So they're able to sell it, which is and heated tobacco is now like almost 40% market share in Japan, which is wild. It's by far the place that's gone the furthest down the road, and that's been a huge boon for Philip Morris, which has the most market share there. But in terms of the actual product, I don't smoke either regularly, but I have tried both. The vapes. They don't really. They're not like a cigarette really at all. It's more like a hookah. So you're breathing in this vapor. It's often flavored, although that has its own regulatory issues, which we can talk about. The heated tobacco product, it definitely tastes a little bit more like a like real smoke, although it's not quite smoke. So it's more similar to smoking a cigarette. So if someone wants the thing that's most closest, similar to smoking a cigarette, they're probably going heated tobacco. Mm-hmm. And I think that's kind of why in a lot of places heated tobacco kind of won the like first round of competition, because it's the most similar to smoking. The most common thing is for the vapor is you're putting in a pod of liquid. So it's like a separate, it's like a razor, it's like a printer ink cartridge thing where you're putting in, there's liquid in there, but you're putting in a plastic thing.
Yeah.
Or there's actually, in a lot of places, the disposable vapor market is big. But those are mostly illegal and unregulated, which we can get into. But and that's probably the most convenient thing. But you do have to, you're buying a separate thing and then throwing it out. So it's a little bit different. But
I'm guessing,
I'm
guessing that with those disposables, those even, I mean, if they become regulated and illegal, it's probably even better for these guys, right? That have a branded product.
So the issue in a lot of places is the disposables have really had a unfair advantage because they are making all sorts of flavors, like even some historically some like pretty obviously targeted at younger people. Like they're making ice cream flavor and gummy bear flavor. I don't know if I'm pretty sure ice cream was a real flavor. I don't know if gummy bear was a flavor. But the flavors are obviously targeted. I mean, they might be delicious for anyone, but they're clearly targeted at younger people, and potentially people that are not of legal age to smoke. And that's actually what brought Juul down in the U.S. But the difference with some of the other companies is they just don't care. AT estimates 60% of the e-cigarette market has gone to these illegal disposables. And the government is like very slowly ramping up enforcement, like fines. They're trying to stop it at the border. They're shutting down websites, but it's very slow, and they're still sneaking through.
Does British American or in your research show, like, I mean, how profitable are these new categories traditional?
So this was actually the first year where the business has moved to profit. The overall like next gen or reduced risk, whatever you want to call it, product category has moved to profitability. So this is a business that went from basically zero sales like 7 or 8 years ago to 3.5 billion last year, and they're just now hitting profitability. And what the company basically says is, if you look at the actual gross margins on the undiscounted price to like a retailer, the gross margins are as high or higher than cigarettes. But in a lot of places they would offer wholesalers and final retailers pretty like large discounts to kind of get shelf space. It's kind of like they felt like it was a little bit of a land grab in the early days to get consumers to try their product first. So there's a lot of discounts going on. And also, like, the price was just set at a lower level. Like we can talk about the price increases of last year, which is a big part of like the results of the vapor segment, for example. But they kind of had a low price, like just get the foot in the door kind of strategy in a lot of ways, which resulted in less profitability. But they're slowly, now that it's like now that the brands are becoming a little bit more established, they're slowly reversing that. And I mean, they've said that they think it should be just as profitable as the core business. And the two things actually that really kind of check out for me in terms of thinking about this is, if you look at Philip Morris, they are now doing like 30% of their business is IQOS, and their profitability has not been hurt at all, really.
Okay.
So they're still doing.
Okay.
So for like the one like kind of scaled business that we've seen. It hasn't hurt their profitability at all, and they're still doing, just looking it up, I think 40%, 40% EBIT margin roughly. So I think I don't think there's good reason to think that it should be less profitable. Okay. I mean, the thing is, if they continue to allow competition, like kind of unfair competition with these disposables that are able to sell whatever flavors, I think that's obviously a difficult burden to overcome for the larger companies, and that probably results in less profitability. But if they do crack down, then it should be. I don't see why it's not going to be just as profitable.
Yeah. So it's not like there's going to be this huge competition, and as a result, they're going to have to continue giving these huge discounts. Or
I mean, it's still basically an oligopoly. I mean,
Mhm.
I know people are worried about vapor because of the disposables and how much success they've had, but like in most places where there's sort of fair competition, the brands seem pretty sticky. Like this is a negative example for BAT, but like in Japan, where you can't sell like there's very little there's no e-cigarettes at all, much less like disposable vapes and ice cream flavors or anything like that. It's just heated tobacco, and IQOS is dominant. Has been very tough to unseat. At and that's a little bit of a similar story in other places. Like even amongst the larger brands in the U.S. that are not disposable. I mean, it's Juul and it's Views, and Views has done very well. They're like 35-40% market share of the sort of non-disposable market, and the competition is not super intense on price, for example. So I think it should be just as profitable as like even if it's not as profitable as the traditional business. It should be just as profitable as like a beer and wine business, or other things that make 20, or a liquor business, or anything else that's like consumer branded addictive product. So I think it should have 25-30% margins in the long term.
Mm-hmm. So, I was looking at vapor. It seems that they've been able to increase both prices and volume, which is fantastic. It seems that looking at their annual report, volume was up 7%. Pricing looks like pricing was like 18%. I calculated these right. So
Yeah, I think that sounds right.
do you think they can continue growing
So I don't
both pricing and
expect
volume?
I don't expect pricing to be such a big driver in the future. It was, it's been a driver recently because, like I said, they kind of had like a low pricing kind of like land grab strategy in a
Mm-hmm.
lot of places. But now that, more and more markets are, sort of like well introduced, I would say, to their products. I think it's going to be more driven by volume. And so the kind of the volume price discrepancy is actually for 2023 under the hood. It was actually primarily a US thing. So in the US, volumes were down 6.6%. And that's because of how much share the disposables are taking. So the
Oh,
disposables are, where they're able to have all the flavors, have just been going gangbusters in the US. And so the market's growing, but you don't see it in BAT's results because they can't have, they're playing by the rules, and they don't have flavors really.
that's ridiculous. I mean, they killed Jewel over the flavors,
Yep. Yep.
and now they're
Yep.
just letting
And now
anyone.
and there was some study that showed that kids didn't use disposables as much, but it was just because Juul had already had the flavors, and they were kind of the default thing. It was, people wanted the flavors. They didn't care whether it was disposable or not, I think.
So they
And so
just
they
moved
just
from Jewel
and
to all the
and
competitors.
exactly, they moved from Juul to all the competitors, and that's taken a lot of the volume out for BAT. But I think that's a temporary thing. Like my main theory is that like there's just no way that disposable vapes are going to be like the one product that somehow is actually illegal, but that continues to be sold at like at like convenience stores.
Hmm.
And it's crazy, but that's the case today. Like you can go into convenience stores and you can just buy disposable vapes, and they're not doing anything about it. So it's very strange. But if you but the reason I mention this is because if you look at um they're like Europe and America's e-cigarette segment, the volumes were up 19% last year, and Asia and Africa volume was up 43% last year for e-cigarettes, for vapes. So it's
Okay,
just the fact, but the problem is the U.S. market is so large that this like disposables taking so much share in the U.S. just dings their whole. It just like really takes down the whole volume growth. But
I see.
yeah, but I think under the hood volumes are still growing strongly.
Okay, so you said you're talking about double-digit volumes outside the U.S. Is
Yeah.
that Okay.
Yeah,
So
I mean revenue.
if
So revenue grew 47% in Europe, Americas, and 60% in Asia, Africa for vapor. And that's price and volume. So it's crazy.
in just the -6% in the US just brought down the
Minus six
total
percent.
to
Yeah, brought it down a lot because
brought down to seven.
it's the biggest market.
Okay.
Yeah.
So basically if the US fixes, then they can sort of continue with, I don't know, 10% growth in volume. What are
I
you
think more.
penciling in?
I think more actually. I mean, I don't try to get that granular on each sub segment of the reduced risk product business in terms of price and volume, but I
Mhm.
think I do think they can grow volumes 15% across their entire portfolio in e-cigarettes if the U.S. were to just get rid of the flavored disposable market. I mean, obviously, there would be a boost in the short term, but they're in terms of the actual like legal products, like they're pretty. It's basically them, Juul, and Enjoy, and they're another number one product by far.
Mm. Well, that makes a lot of sense now that we've gone through that. That makes a lot more sense to me than when the company says they can get to like 50% of their revenue from non-combustibles by 2035. Because if you're looking, vape can really help drive that. Because if you take, 23 and you put 15%, then you get to like just from vape 10 billion, right, in sales.
Yeah,
So, that's a third. That's more than a third just from 15%. And even if you don't believe the 15% volume and you say, oh, well, volume is going to be like 12, heck, you're going to get another 3% from pricing, you still get to your 15. And, if you get to your 15 and you put another 5% pricing, you could even have 20%. So
yeah.
it sort of comes together then, based on what is the potential for vaping. But I think heating products, that's more of a flat situation. Is that right? I mean, at least in
Yeah,
23,
so
it looks like they
yeah,
were flat.
heated tobacco. They're they've basically been getting outcompeted by Philip Morris for a while in that business. I mean, they're still the strong number two in Japan, but I think their market share is like on the order of 20%. And yeah, so it hasn't obviously done as well as vapor.
Hmm.
So I think that's going to continue to be a lower portion of the growth of the reduced risk products. But
Yeah.
I think they can probably still grow it. I mean, their volume was actually, if you exclude their disposal of the Russian and Belarusian businesses, their volume was actually up 11% in heated tobacco. It's just that they actually had to cut their prices in Japan due to some. I'm not sure. I guess Philip Morris must have cut their prices in Japan. I'm not entirely sure what happened there, but
Okay.
they talked about harmonizing their prices in Japan, and that's what kind of drove the like flatness of the overall business last year.
And I guess it's something similar with traditional oral. Is that in decline, or is that sort of a
Yeah,
flat
I
situation,
think
do you
that's
think?
gonna. I mean, it's a roughly 1 billion business. I think that's
Hmm.
just yeah. My guess is that just flatlines or declines. I include that in kind of the traditional business that just basically declines at like some single digit percent every year.
What do you think the traditional does? I mean, do they like
It's
minus
hard. Yeah,
1%, 2%,
on
or
my model. I have -3%. It's done historically. I mean, historically, it's basically been flat over the last like 5 years. But I think you've seen larger declines in volumes recently. Like in the
yeah.
U.S. last year, volumes declined like 10%, and so I don't know. I don't think volumes are going to keep continuing to decline 10% in the U.S.
Yeah.
But they are over indexed to the U.S. So um, it's hard to know exactly where that's going to shake out. But I assume 3%.
Yeah.
Which is probably 7% volume declines and 4% price increases. I think is kind of the way
Makes sense.
the way I'm thinking about it. So
Yeah.
pricing a little bit above inflation, and 7% volume declines.
Yeah. I mean, the last 4 years, I calculated here like 1%. I was wondering, could this is this somewhat is this could this be at all correlated with like the smokers and who's smoking and some of the more traditional smokers dying, let's say, in the single digit category, and so people who are left are like the younger folks who are not using cigarettes. I'm wondering.
Well, yeah, I mean, certainly, it's definitely a problem in the tobacco industry that, um, you know, like it's probably more common for people to die than to successfully quit. At least before these reduced risk products. I think now it should be much easier to quit if you just vape.
So the other thing that popped out to me, so we have vapes doing great. I mean, modern oral. What the heck is going on there?
Yeah, I think revenue was up like 33% or something last year. It's interesting because it's all outside the US. So the US is the biggest market for modern oral products. They have this Philip Morris has this thing called Zyn, which they bought from Swedish Match.
Mm-hmm.
And the revenues of Zyn are growing like I think last quarter it was like 70% or something outrageous. It's been just a phenomenal business for them. Um, but interestingly, the BAT product Velo has, I actually don't know if it's Velo or Velo. I think it's Velo. Has like over 60% market share outside of the US. But yeah, Velo's been going gangbusters. I mean, it grew revenue 42% in Europe and 50% in Asia, and then they basically shut down the U.S. business because they haven't gotten approval yet for their next gen product. So they have this thing called Velo 2.0, which is it's a much more moist packet. So for whatever reason, the first version they launched was drier, and then they kind of realized with consumer testing and whatnot, looking at other products, that like the pouch needs to be more moist, I guess. But it takes some development to actually make it work. But the U.S. government hasn't approved it yet, even though it's just like it's not really different than the other one, but they just haven't approved it. So they keep on saying we're expecting approval in 2024, and they have this kind of plan for like a large scale rollout of the product in the US. But yeah, they outside the US they have 60%, 67% market share, and they're growing like 40% plus. So I think this could easily be I think it could easily be a 2-3. I mean, right now it's 550 million business.
Mm-hmm.
I don't see why that's not a $2 or $3 billion business in a few years.
You're looking at like over 20% growth then, I guess. Like, what do
Yeah,
like? You think they can do like 20-25% a year then?
I think they could actually do much higher growth in the short term, depending on how the U.S. launch goes out. I think it would be interesting to run the numbers. I should actually do this on like if they took 30% market share of the U.S. modern oral business, like what type of what I think the U.S. business is like a 1 billion plus. I have to check that, but I think the U.S. might already be like a sort of $1 billion business in modern oral because Zyn is just flying off the shelf. Like if you look at what they're going to do this year, so that would be like 300 million if they got 30% market share. So that would be like that would be 60% growth right there. But
Is there
yeah,
a difference between the? I mean, I don't know if you have you seen anything that compared the two products.
they are. I mean, so the only thing I know, I'm not like a connoisseur of the products. I've tried both. Honestly, for me, they're pretty hard to keep like in my lip for very long. They're a little bit intense, but I mean, I'm guessing for people that are more used to like nicotine, it might be easier. But I've heard that so in Canada, I don't think they officially have Zyn or Velo sold in stores, and but people import them. People like get them off websites and stuff. And I've heard reports that Canadian hockey players, for example, love Velo, and they get the Velo 2.0 from Europe. They buy it off some European site and get it shipped, and that they prefer that over Zyn. So I don't know I don't know which one would win in like a fair fight in the US, but I just know that they just don't have their like real product approved here yet. So they're kind of in a holding pattern in terms of they don't want to, I think they don't want to spend money marketing yet before they have their like real product approved.
Well, based on what we just talked about, and I'm just penciling in some numbers here, and I'm seeing, hey, if we get like -3%, let's say, on combustibles, and we get 15% on vape, flat for heating, flat for traditional, and 20% on oral, which actually could be more. And we definitely get to non-combustibles being something like 16, 17 billion, and another 15 billion from combustibles. We get to like 33 billion revenue versus 27 today. So that's like a 2% CAGR, and keeps the business going, keeps the dividend flowing. That should keep investors pretty happy. Now, what about management? What do you think about the management? I haven't really looked at, CEO, the chairman. I mean, have they been around for a while, or what's their background? Do you have anything to comment on them?
The CEO, he's new. He's new, well, newish from 2023. He's sort of a lifetime, BAT guy. He was the finance. He was the CFO before.
Why did he become CEO? Was the other one kicked out?
Yeah, the other guy was kicked out. It wasn't really super disclosed in terms of like the machinations behind the scenes. It was a little bit of a surprise, but I mean the stock price was down like 50% from the 2017 high. So like during the previous guy's tenure from like 29, the previous guy to 2023. So I think people just thought, he didn't make headway against IQOS. Stock was down 50%. Just time for someone new to kind of drive the boat. And this guy, he seems good. I mean, he hasn't done anything too stupid, in my opinion. Like they're I think they realize how cheap the stock is. Like they're taking the opportunity to sell a few billion of ITC to buy back the stock, which I think is smart.
Should they be reducing debt some more?
Yeah, they have been paying down debt. It's debatable. I mean, when your stock is so cheap, it's it's tempting to just buy back the stock. I mean, they've taken the debt down from 50 billion to 40 billion. So that's nice. And in terms of like, in terms of like EBIT ratios or whatever, it's still, like net interest expense is only like, it's, less than 15% of EBIT. So it's not, the EBIT to interest expense ratio is, like 6 or 7 times, I think. So that's nice. Yeah, they could pay down a little more debt. But yeah, but I know some people that think they should cancel the dividend and just buy back the stock, or not cancel, but reduce the dividend, but just buy back the stock. But, obviously your opinion. Yeah. I mean, makes sense to me, but obviously it's a little more risky. Yeah.
It is, I'd say there's a lot to like here. The only thing personally I didn't like, to be honest, is that, if you look pre-2017, when it was trading at higher multiples, they also had a higher return on capital, higher return on invested capital. And then they did the acquisition, you add in all that debt, the goodwill, etc. So their invested capital went up a lot versus, the additional gain. So, that's the only negative I would see. So if I was to judge, let's say personally, the management, I'd say, well, the invested capital is like over 100 billion, and what are you generating on this?
Yeah, I mean, I think the return on invested capital is definitely not, it's shooting the lights out. I think if you add back the goodwill that they wrote off last year, it would be like a 10% pre-tax return. So, whatever that is, like an 8% post-tax return, something like that.
It's not really,
which is not, it's not great.
yeah.
But it's if you look at kind of like longer term averages, it's sort of it's kind of like middle to pack to like maybe a little bit lower.
Yeah.
But I think for a company that's trading at like 6 times earnings, and maybe less if you back out the ITC stake, I think for that, a return on capital, a pre-tax return on capital of like 10% is probably fine. And the other thing is like they're not repeating any of those investments anyway. Like you're just going to get paid out. Like they could, I mean, honestly, they could have 0 assets on the balance sheet or $1 trillion of assets on the balance sheet, and it wouldn't matter because they're not reinvesting. They're just paying out all the cash flow.
Wait,
So
how much did you say what the ITC left? How much is that in the market then?
how much is their stake worth?
Yeah.
Like 50, I think it's 15 or, I mean, it depends on the day because of the price of ITC, but like around 15 billion, like what's left.
Billion. So it's what, BATS
it's like
is
30,
55.
a little less than 30% of the, yeah. So if they actually sold it, it would be material, but
it would be material.
Yeah. I wonder if their long-term goal is to get vapes into India.
Yeah.
Via ITC. Because that would be a potential home run. They're not legal in India now, but
so maybe there's a long-term plan there. So maybe you can't then you wouldn't take it off because you would think it's strategic or part of, let's say, your capital. So then you would, no, that's great. I mean, okay, so we've talked about this. What do you think this is worth?
So I'm not a huge fan of sort of like point, kind of like point DCF, now like numbers. I like to do IRRs personally, but in terms of, the way I look at it is if menthol in the US doesn't get banned, so we could talk about that, but the Biden administration was talking about banning menthol. Now they've kind of tabled it and it looks like Trump is going to win anyway. So it's probably, out the window for a while.
How much of their business is that?
It's a big chunk. It's probably like 5 billion of sales. So whenever
so that's a risk. That's a big risk.
So that's a big risk. If menthol gets banned, it's a big risk. I mean, they say they can keep 90% of the customers, but I assume they lose 50% if menthol gets banned. So if menthol doesn't get banned, if menthol does not get banned, I think the total business grows. And
so what's the argument for banning menthol?
The argument for banning menthol is that research shows it's slightly more addictive, probably just because it tastes better and people like it. It's kind of like adding an additional taste profile to an addictive product, and it disproportionately affects African Americans in the U.S. So they're by far the largest segment that smokes menthols. Okay. And so on the one hand, you could argue that making it illegal is actually punishing Black African Americans because it's like taking away something that they do that they enjoy. But from a health perspective, you could argue it's doing something, improving their lives because you're like kind of forcing them, a chunk of them probably, to quit. Now, I view it in the U.S. We had this whole controversy over the past 30 years where a similar argument was made for very harsh penalties for crack cocaine as opposed to regular cocaine. I don't know if you know about this, but so you could literally get 20 years in jail or something for getting caught with crack cocaine.
Oh wow!
But if you had just normal powdered cocaine, you would get 1 year in jail. And the argument was, well, crack cocaine is a little bit more addictive and it's disproportionately hurting lower income communities. So let's really try to eradicate it by giving very harsh penalties. But what they realized over time was all that was doing was just putting young Black men in jail for 20 years over something that a young white male would get a slap on the wrist for, essentially. And so it was eventually viewed in a very negative light. And so I kind of doubt that this will actually get implemented for that, for the same reason. But it is a risk. So if they don't if they don't ban menthol and new categories kind of grows out of, I mean, I try to be conservative, so I assume 15% growth in the near term and then dropping to 10%, and that's not really accounting for the potential for Velo in the US and things like that could really kind of set the growth higher in the short term. But it nets out to broadly broadly stable revenues and profits, like slow growing, but growing. But then what do you end up with in 2030 is a business that has 30% of revenue and 20% of profits coming from the next these like reduced risk products. And that was really sort of the level. That's like kind of where Philip Morris is at right now, roughly. And that's the sort of level where I think that investors are going to start to realize, these companies are not they're not the evil that they've kind of been painted to be. And in fact, their products are going to save a lot of lives, some of the products. And so I pencil in an 11 times terminal PE ratio in 2030. It could be higher. I mean, Philip Morris trades for like 15 times, I think. But I pencil in 11 to be, I think, a little bit conservative, although obviously it's still higher than the current multiple. And I get a roughly 20% IRR over that period. Yeah.
Okay. No, that's great. So basically, sum it up, we have these new categories that are doing very well, actually, and it looks like, based on what we've discussed, they could put in lower numbers and they still get to a really big chunk of revenues in the future. These things becoming just as profitable eventually than with tobacco. And I guess the biggest risk that, we've mentioned is the menthol. Is there anything else?
Menthol's the biggest risk. And the second biggest risk is that the vape business never gets to like full profitability because the governments continue to allow the sort of unfair competition along flavors by the disposables companies. I don't think that's going to happen, but that is probably the second biggest risk, is that they keep letting these disposables sell whatever flavors they want, even though they're banned.
Is that in a lot of countries then?
I think so there's tons of countries that are sort of working on bans for disposables, and I think I do think that the sort of the flavor versus non-flavor issue for disposables is an issue in a lot of countries. Yeah.
I've enjoyed this very much.
Thanks.
If people want to learn more about Bireme Capital, you guys have a website. What's the website?
Yep, it's biremecapital.com.
So that's
you go to
BIREME Capital.
Capital.com. Yeah, go there, or you could go to my Twitter, which is at Evan Tindel.
Okay, fantastic. Thank you very much, Evan. Thank you. Thank you very much. Have a good day then, man.
Thanks, Sophocles. You too.
Bye.
Bye.
The podcast episodes should not be copied, distributed, published, or reproduced in whole or in part without the prior written consent of the host. These recordings are for informational purposes only. This recording does not address all risks. The podcast is not intended to be relied upon as a forecast, research, or investment advice, and are not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. The views and opinions of any podcast participants are subject to change and are not necessarily those of any companies affiliated or associated with the participants. The participants cannot guarantee the accuracy of the information in this podcast and has not independently verified the accuracy or completeness of such information or the assumptions on which such information is based. There is no guarantee that any forward-looking information will come to pass. Reliance upon information on this podcast is at the sole discretion of the reader and/or listener. Past performance is not indicative of current or future results. This podcast is being made available for educational purposes only and should not be used for any other purpose.